All right, Doug, today I'd like to talk about the broader stock market because we've talked about the idea that the stock market seems utterly disconnected from reality. I mean, GDP is down double digits, and yet, the stock market is was hitting all-time hot new highs for quite a while. And as we come into the tail edge of the hurricane, as you've called it, where things get, the economic pain really comes, and the financial pain follows. I just What thoughts on the stock market? I mean, these trillions of dollars of currency units have to go somewhere. That's where they've been going. They're going to print more. Won't it all go there? Why wouldn't it just keep going up?
Yeah, well, let's look at it from a historical point of view, perhaps. And the stock market, it's a big deal for most people today. But originally, the stock market was just a means of putting people with money together with people with ideas and labor. So it was a very logical thing, simple thing. But today, finance and money and shuffling money around is a truly major part of the economy. But it doesn't produce anything. It's it's been it's a real problem. It's gotten away from the basics where the fact of the matter is it used to be an investor would look at the options of publicly traded stocks and try to figure out which one has earnings and management and proper book value and is in the right business. And he'd contemplate all these things and say, okay, I'll put my money there and grow with the business. All right, nobody thinks that way anymore. It's all about trading today. It's all about second guessing somebody else. There was a commercial, I forget what they were peddling years ago on television, where they had some lunatic type guy saying, hello, New York, buy. Hello, Chicago, buy. Hello, Los Angeles, sell. New York and Chicago were buying. And the object of it was to show how crazy traders in the market are.
Yeah.
And it's really become like that today. And these people, there aren't really any long-term investors. And it makes sense because in an economy like this, where there are trillions of dollars being created, like from a fire hydrant in New York and Washington, you got to figure out where they go. Forget about what the business is doing. Where's that money going to go?
Right.
So, so investing is not where it's at. And as people have got all this money and they see the market going up, you've got FOMO, fear of missing out, got to get into the market. And you got these people that apparently 10 million people, I think that's the number that I've heard, that have glommed onto Robinhood,
Hmm.
which offers supposedly commission-free trading, even on fractional shares of stock. It's a brokerage firm, but people that don't have any money and even less knowledge.
Hmm.
So it's funny. They think that Robinhood is going to do stuff for them for free,
Hmm.
but they're not a charity. You're actually being charged one way or another.
Right.
It's just kind of buried. It's kind of hidden.
Actually, I got to tell you a quick story about Robinhood because, so my girlfriend was last year just trying to get into investing and didn't really know much about it, and but learning and very active learner. And so I said, one of the a lot of people are buying on Robinhood now, because of the no commission trades and all that. And so she went and she's setting up the account on her phone because it's designed for mobile devices. Okay, so she's setting it up on her phone while we're driving back from near Aspen, actually, and she's walking through the screens of the setup. And when she's created her account and all of that, the the first thing that they do, the first thing that they offered her was the opportunity to sign up for options trading. Now, she specifically had to disclose how much experience she had in trading. Well, how many years experience do you have in stock investing and in bond investing and in options? She said zero in all of that. And the first thing they did was they tried to upsell her into options trading. That's how crazy it is. I wouldn't have believed it if I hadn't actually witnessed it with my own eyes. It's so irresponsible.
Yeah, it's very funny, and it's proof that that a huge swath of the public is using the stock market overtly as a gambling casino, as a mechanism for get rich quick by betting it all on, red and hoping it comes up that way.
Well,
Yeah,
what's the difference between gambling and speculating?
yeah, this is an interesting distinction. Um, if you're going to be in the market, I've long thought that there are kind of four ways you can play it. You can be an investor, you can be a speculator, you can be a trader, or you can be a gambler. I think those are the four approaches to the market. And of course, it used to be that everybody wanted to be an investor, which amounts to planting a seed in the right place, watching it grow up, and that seed gives you, 1,000 seeds in return. One corn seed gives you a plant with, 5 ears of corn, you get thousands of seeds. Okay, that's investing. It's productive allocation of capital.
Hmm.
So very good, but increasingly impossible in today's world with all the regulation and all the distortions and the currency inflation. And nobody's got that kind of long-term time frame anymore because they can see the world is becoming very unstable. Technology is changing rapidly, but okay, that's investing. Then you've got speculation. Now, if we lived in a free market world, uh, one where government wasn't really an element at all, uh, there'd be very little for a speculator to do. Why? A speculator, what is a speculator? Well, you can use several definitions that I think work, but today the best definition is it's someone who takes advantage of distortions in the market, generally, almost always caused by government intervention. Classic examples, gold in 1971, that's an all-time biggie, suppressed in price by the government for 40 years, and it had a lot of catching up to do. So if you bet on gold in the early 70s, you'd make a killing. That's one. And there's other examples, like the famous one of George Soros breaking the Bank of England, making $1 billion being short the pound. Okay, capitalizing on distortions. Well, neither of these things are possible if we lived in a free market world. But today, you're almost forced to be a speculator because there are so many distortions. Look, it's like during the runaway inflation in Germany in the early 20s. You couldn't invest. You didn't know what was going on. You had to speculate desperately to stay ahead of the inflation of the currency. Most people weren't very good at it and lost. Anyway, that's what speculating is. It's an important skill to learn in an environment like we are today. But most people confuse speculating with these other two things, which is to say trading and gambling. And the fact that everybody is doing this today, trying to be a speculator or thinking that they can trade the market, it's a sign of the top. It really is classic. Like in the newsletter business where I am, I find that there are people that know nothing paying thousands of dollars, which is a real nick for most of their balance sheets, for a trading service that promises to make them wealthy for life. But it's absolutely impossible and ridiculous. Look, trading is a real skill. It takes a special person who's both skilled and has special aptitudes for it to make money trading. And people can make a lot of money trading, but they're 1 out of 100. So the broad unwashed, people that are coming from the highways and the byways, the lame, the halt, and the blind, all send in a couple $1,000s, 5,000, who knows how much they send in for these services, that says they're gonna make a killing. Now I'll tell you why they're not gonna make the killing and why they're gonna lose all their money before it's over if they try to be a trader. First of all, it's that upfront expense of getting advice. But then, even if your guru giving you the advice is actually a genius, by the time he gets it to you, or you look at your iPhone and then place your order, you're way behind the eight ball. I mean, big institutions and traders spend millions of dollars to be a millisecond closer
Yep.
to getting their order in first. And here are you, minutes, hours behind, competing with these guys. It's not going to work. So that's number one, or number two, actually. But then people don't realize that in addition to the time lag, you've got the bid-ask spread on everything, including options, the buy and the sell. Okay, and there's a spread in between. That's eating away at your capital. Third is the commissions, which are there whether you see them or not, like with Robinhood. They're eating away at your capital in addition. But the most important thing about trading is that it's a psychological game that most people are totally unprepared for and unskilled. I don't like trading for all kinds
It's
of.
not for me. I've learned it's not for me. That's for sure.
No, it's not. I mean, eventually you wind up second guessing your expensive guru, then second guessing yourself. And it's a formula for disaster, but that's what most people are trying to do today. So, and it's horrible because these people that are wagering money on basically racetrack touts, where it's like going to the track and buying a tout sheet, bet on that number 7 nag in the 5th race. It's exactly the same thing. And everybody's going to lose. And if they win in the short run, well,
Only encourage them.
yeah, exactly. If God forbid you got lucky on your first trade or two, because then you up the ante and you'll really blow your brains out in these things. Anyway, this is a sign of the top of the market. When people are doing that, it's the top. The bottom comes not only when people cancel all their services and their accounts with their brokers that have been blown up. They don't even want to know the stock market exists, and they'll get angry if somebody actually mentions the stock market to them. So
Right.
that's when you buy. It'll be hard to do instantly because it'll look like the world is coming to an end. And it'll look like that in the next few years. I'm pretty confident.
Mm-hmm.
So that's one thing is trading services. And the other thing that's popular now is tech. Everybody's buying tech stocks. They've seen Facebook and Amazon and Google and a whole bunch of these things go up. Okay, yeah, tech is great. And, I agree. Moore's law exists and Ray Kurzweil's right about the singularity. All true. But the time to buy tech stocks is not when you're running with the herd with all the other idiots. Because at some point, the market will turn and you'll get trampled by the herd. It's a tiny little exit door. And most people aren't going to make it through. It's like a crowded theater where all of a sudden somebody yells fire and it's the game's over. So, and tech stocks, of course, are one of those things that are also historical bells ringing at the top of the market. It happened in the late 60s. It happened in 2000. It's happening again right now. So unless you really are an expert and you know about the science and you know about the technology and you're wired with the people there where you're in the room when things are happening, I mean, another sign of disaster in the market.
What's gambling then, as compared to
Oh,
that?
I'm sorry, we got off on a bit of a tangent. Okay, so forget about trading. Okay, investing, speculation, gambling, trading. Gambling is where you place a bet based on random odds. And they forget that the house takes a rake when you gamble. I mean, but at least when you don't know what's going to happen. You're just gambling, hoping that, red, that it comes up on 23 black when you place that bet on the on the roulette wheel and you get 36, 35 to 1 on your money, something like that. So that's what people are doing today because they know nothing. In fact, today, there's so little knowledge that people don't even refer to these companies by their names. They refer to them by their stock symbols. It doesn't matter what the name of the company is or what it does. It's just that somebody said it has a good story. So
Yeah, well, but maybe that's actually a more accurate reflection of what the stock market is because it's disconnected from these actual companies in many ways. I mean, it's I feel like there probably was a time, not in my investing life, but there probably was a time where investing, it was like the idea is that you own a share of the company and you would be earn dividends from it. I mean, that's a core of it. Like that's an investment returns cash to you in some way, right? It's not counting on the price to be able to sell it at a higher price.
yeah,
So the company success really mattered in that where you're paying cash, but now no one pays dividends or the dividends aren't very much. And so it's all about the price changes.
and if you're buying options, I mean, it's doubly removed, and
Yeah.
it's most people. I mean, they don't really understand that you buy an option; it's a wasting asset. And they don't really understand that if you sell an option, you've got basically unlimited liability. Your whole
Mhm.
account and maybe more is at risk. They don't realize any of this stuff. They really
Which is
don't.
why Robinhood should not offer it to brand new investors on day one. I mean, it's insane.
No. Anyway, options serve a useful purpose for sophisticated fund managers to hedge their risks on the upside and
Yep.
the downside. That's what they're there for. They're not there to gamble for the hoi polloi.
Right.
So,
Right. But to get you leverage and supposedly bigger return. So I wonder if you would consider the most basic activity in the stock market today gambling. Let me just explain the situation, and that is that most people don't understand the companies. They don't really understand the underlying economic things that are driving the company's earnings. Earnings aren't really even related necessarily to the stock market anyway, and they're buying broad market, index funds. And they're told that, it's about just putting the money in and, the important thing is just to keep putting money into it so that you have, and then it'll grow. It always does. It'll grow and you can take it out later. It seems like to me, that feels like that's gambling in a way, but it feels like it's low risk gambling. And I think people are probably totally misassessing the risks associated with that today. But I think most people, that's their approach. They just, the 401k puts it into some mutual funds or whatever on a monthly basis. Um, and they're not really doing, most people are not doing the active trading, but are they actually all gambling?
yeah, whether they know it or not, I mean, you really shouldn't buy stuff that you don't really understand. Because, look, one way or another, you spent hours of your life not only earning the money and then paying taxes on it. And then when it's blown away in some foolish gamble, I mean, it's pretty serious. You're really pissing away the hours of your life that you spent to earn it. So you shouldn't be too cavalier about it, frankly.
Would you consider though, I mean, given the fact that the stock market today is certainly driven by the trillions of currency units that have been almost, well, no, I would say certainly going to be printed in the future, they're going to go into asset prices, you would think. Is it a reasonable, and if that's all because of government manipulation and, the hands in the market, is it a reasonable speculation perhaps to be long the stock market?
Hey, listen, the stock market could double from here. If they double the money supply from here, it'll probably double. But this is gambling, having to guess on these things, and the stock market is now very disconnected from the economy. It used to be, well, bet on America, the economy is going to grow, companies will do well, stocks will go up. Okay, that's a very reasonable argument now. But now the stock market is very disconnected from the economy. So, look, I don't want any part of it. Now, I know it could double from here. And I'll say, oh, gee, I could have doubled my money. Yeah, I could have gone to the casino and bet on red and doubled my money. But you're better off going to the casino in many ways because at least there You're going to have a good time while you're there. They're going to buy you free drinks, give you a free show and stuff
You
like
might meet some friends.
that. Yeah, exactly. So why not just be honest and do that?
Hmm.
I mean, if you want to gamble, I mean, at least play poker where there's an element of skill that you might be able to master. But it takes a long time to master the skills that it takes to be a successful investor in the stock market.
Especially if you're entering into a state where the stock market is already at these all-time highs.
Yeah, it's time to get out of the water. And of course, then the thing is that well, then what are you going to do with your money? If you leave it in a bank account, a inflation is much higher than the interest that you're getting before you even pay taxes on the piddling interest you get, and B, maybe the bank is going to fail, although you are covered up to $250,000 in the United States. And most of the people in the stock market with Robinhood have nothing approaching the amount that's insured, even though the FDIC itself is bankrupt. I mean, they've got like
Right.
$13 billion of assets, which is, you know, the FDIC can handle a couple isolated failures of small banks, but beyond that, they've got to go to the Treasury to print up money to, bail out the big guys. So what do you do with your money? Uh, there are no good alternatives today in this unstable economy. Well, I'll tell you what I do. It's that right now, if you want to speculate, I'd say buy gold mining stocks. I mean, it's a crappy 19th century choo-choo train business. We can have a whole conversation about why mining in general and gold mining in particular is a crappy place for your money. That's all true, except sometimes these gold stocks go from being way overpriced to really, really cheap and then back again. And right now, they're pretty close to the back again, way underpriced. And as explosive as things are today in the world, they're going a lot higher. Basic rule of thumb, the all-in sustaining costs, that's soup to nuts, management, replacement of assets, everything. It costs miners on average $1,000 an ounce to take an ounce out of the ground, but they can sell it now for 1,800, 1,900, 2,000. That's a profitable business. But forget about the public who know nothing about gold or the mining business. Even professional fund managers know nothing about this whole area. In fact, it's poison to them because Warren Buffett told them that gold is just a pet rock. So, yeah, you want to buy something that's cheap where nobody else is? Yeah, you buy gold mining stocks now. Unfortunately, or fortunately, there are over 2,000 of them, and most of them are crap. So you have to be careful. But if you choose correctly, I think in the next, not over your lifetime, but over the next few years, I think you're likely to get 10 to 1. And if you really get lucky and hit the right lottery ticket, you could get 100 to 1. I personally owned at least one. No, I've owned two stocks, two story. And they weren't small positions that went 1,000 to 1 in the course of about 4 or 5 years. That's unbelievable. It's true. It's true. So this stuff happens. It actually happens.
Well, let me do a little sales pitch for a special report we'll be releasing in the next couple of days. It actually, highlights your predictions, the major predictions you have for the 2020s, the next decade, and makes some specific recommendations for some of the gold mining companies that you really like. So if you are interested in getting that, there's a link in the description. Go there, sign up, and we'll send it to you for free when it's released.
Yes, I think it'll make for an interesting read. And regarding the gold stocks, I think, what do we have? Just 5 or 6 or 7 of them.
Yeah.
Frankly, they're all just stocks that I personally have the biggest positions in. So if you don't like that idea, don't buy those stocks. Buy some other stocks. I mean, I'm not trying to tout anything. I mean,
Right.
I'm just telling you, hey, this is what I'm doing. Take it or leave it.
Right. And I think that so that one of the key differences in because this is a speculation. It is the gold stocks, buying gold stocks today is a speculation. It's a speculation because it's counting on the distortions that are created by governments around the world and causing and lots of currency units being produced, the dollar being devalued, things like that. And so because of that, that is a perfect setup where there's likely once people recognize the value of these, there'll be a huge flow of capital into them, and they're because they're underappreciated now, underowned, and there's just a lot of upside. Now that setup compared to the stock market today, which also we talk about, is arguably a speculation. I guess if you're counting on the trillions of currency to go somewhere, the difference is the risk reward with them is vastly different because the stock market broadly is already at all-time highs.
Exactly. And I will point out that these gold mining stocks are not heirlooms. They're most of them are burning matches for all kinds of reasons we could discuss. And I look forward to the time when uh, Slime and Newspeak, if they still exist, run a front cover picture of a golden bear tearing apart the New York Stock Exchange. And that will be my bell ringing at the top of the gold market, ideally, in
Yeah.
the best of all worlds, at which point I will sell 100% of all my gold mining stocks and buy something like Berkshire Hathaway, which will be much lower.
Much lower. Yeah, I agree. Okay. All right. So the net here is that for the stock market for the next one more question. From historical parallels. The stock market today, the market action, the people's attitudes, the way people are participating in it, the Robin Hooders and people like that. How does that compare with prior cycles, whether it be the 2008 financial crisis or the dot-com boom bust? Like how does it feel, and what I guess what are the similarities you see?
I think a much higher proportion of the American population is involved in the market today than has ever been involved in the past.
Mm.
Yeah, there have been crazy bubbles in the past. Everybody knows about 1929, and then the second big bubble after that was in the late 60s. There were a lot of people involved in it that shouldn't have been. But I think as a proportion of the population, I think there's probably more people involved in it now than have ever been in the past. I don't have the statistics here of exactly how many people that is, but and I'm not even counting the fact that in the 20s and the 60s, relatively few people had pensions compared to today. A lot more people have pensions. And those pensions are in the stock market and even worse in the bond market, which is another entire discussion.
But what about one of the things that stuck out to me is that like I thought the market was really expensive at the beginning of the year. I mean, it really felt like it was like how much higher could it go? The risk situation seemed, risk reward ratio in the market seemed already a little off at the beginning of the year. Then we have the global pandemic that strikes, the economy goes in the crapper, and then the market goes down briefly and then begins this big ascent. And then came in what felt like the day traders I remember from the late 90s, with the Robinhood people. And it just felt like you didn't have that. We didn't, it was like now we have this broad, you know, um, people seeing it as a cash machine for themselves in a way that maybe a retail investor didn't see it even a year ago. And so that just, it feels the same to me as the first market crash or setback I experienced in my investing life, which was in 2000. It feels a lot more like that now than it did even a year ago, simply mostly because of Robinhood and things like that.
Yeah, and of course, the stock market and the economy are two entirely different things. Unfortunately, most people conflate them, but they're not doing that today because I'm of the opinion that we're still in the relatively early stages of what I call the Greater Depression. And you look at just certain sectors of the economy that have already bit the dust. The hotel industry, the rental car industry, the airline industry, the restaurant business, And this is where you've got, I don't even know I don't think anybody really knows what the actual unemployment numbers in the country are, because there's so many ways of computing who's really unemployed and who's actually not unemployed. And
Yeah.
maybe the best thing is the number of government checks that are mailed out to people. So, look, the economy does badly. People draw on their horns, and corporations sell less stuff. And all these corporations are head over heels in debt today. Take the airlines, for instance, okay? Uh, they've paid out, what's the number? They paid out something like $50 billion in buybacks and dividends in the last few years, and they financed it mostly with borrowed money. So, they've dispensed the earnings, the debt's still on the books, and they're all hemorrhaging money. Now, how's that going to end? Well, I guess the government will just give them more money. But
Seems like it.
but then what happens? So we're in many ways in uncharted waters right now. I think this is going to be much more serious than what happened in the 30s by the time it sorts out.
All right. Okay. Well, we'll leave it there. Thanks a lot, Doug. I appreciate it.
Thanks, Matt. We'll talk tomorrow.